Hello friends, today we're talking about Salesforce. Salesforce just released their earnings and they were absolutely great. However, the outlook was a bit mid and people were being down about the stock because of that. So the stock went down, but we'll have a look at it and see if we like this stock or not. I've got 5 big takeaways from the Salesforce earning. The first one, of course, is AI. No earning call can be complete without AI. And of course, there's always good news about AI. The AgentForce AI pivot is scaling fast. AgentForce has officially crossed 1 billion in annual recurring revenue. And combined AI and data layer ARR hit $3.4 billion. So they're really happy with the performance of their AI products. And these are growing fast, which is really nice to see. Now the second thing we saw in this earnings call was a double beat on top and bottom lines. Revenue was higher than expected at $11.13 billion and the earnings per share were also higher than expected. So more income, more earnings, more revenue, beating everything. The third good news was that they raised their full year guidance. They went from $45.9 billion to $46.2 billion, what they expect to have as a full year revenue for the coming fiscal year. So again, great news all around. AI growing, revenue beating, profit beating, full year guidance going up, and the good news didn't stop there. The fourth thing that was great about this earnings report was that they had a massive shareholder return. They entered into a massive 25 billion share repurchase program, which already retired 103 million shares. That's what you love to see. If a company has enough money and doesn't really see anything on the M&A front, that they at least try to buy back a lot of shares and this way give the money back to the shareholders. So again, great news from Salesforce. The fifth thing, this quarter marked the initial consolidation of Informatica's financial following the recent acquisition of Informatica, which added $444 million in revenue and $402 million in subscription revenue. So to summarize, they had a great quarter. Their revenue this quarter was up 13% to $11.13 billion. Their operational income was up for this quarter to $2.28 billion. They are now projecting a full year revenue of $46 and a bit billion, which is about a growth of 10 to 11%. And for the full year, they're expecting to have an operational income of $7.5 billion. So all in all, great numbers, growing. Every metric is growing. The stock didn't really perform well because the Q2 outlook wasn't that great. They were expecting more. However, it wasn't bad either. And for the next quarter, they also expect to beat their revenue by 10% year over year and also up their earnings again. However, analysts weren't too impressed with that. They're expecting to have AI agents have a big impact on their SaaS model and they were not totally impressed with these numbers. However, for now, this company is still growing pretty nicely and turns a nice profit. However, with a market cap of $145 billion and a growth that isn't exceptional but is just okay and good, I don't see us putting our money into this company. This is a nice company if you want to have some ease of mind and set it and forget it. Of course, if you believe in AI agents taking over all the things, then it might come crashing down. But if you believe that they can adjust to this new world and also deliver on the AI promise, it might be just a safe bet to put your money in and see it grow slowly. But of course, if you are looking for the next 10x or 100x company, which we all do, and especially on this channel we are looking for, then I don't think Salesforce is the right bet. If you just look at the performance of the stock for the last 5 years, it has gone up and down and now is again on a downtrend because of the AI fear. So would I put my money in this stock? I don't think so. I'm really curious, are you interested in buying into this stock? Do you think it can adjust to the AI hype? Have you bought this stock in the past? Let me know in the comments down below. See you, bye.